Hi guys, welcome back to Morant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. It's earnings day for AMC. I'm excited. I'm going to show you exactly what we said last night and then how it all played out. And then I'll explain what's really happening here. So for the first time that I can remember, the AMC earnings numbers came out early, like really early. And we'll play with Adam Aaron for a little bit, but I know he's very excited to pump his company, his stock, whatever it may be. But let's listen to this little clip about what I said last night about AMC earnings and how I thought they were going to play out.
I feel their total revenues are going to be around total about $1.34 billion for the
$1.34 billion. So let's go ahead and look at it, guys. What did it come out to? $1.34 billion. You know what's the hardest part to do is when you have to factor in popcorn, credit cards, concessions, it's really tough to figure out how much they're actually going to come in at. How was I able to do it? Well, as you guys know, we study balance sheets. So came in on the right number. I said they could get up to $10 million on revenue. It was at $8.6 million. I felt it would be a good quarter for them. I know that next quarter is going to be a phenomenal quarter because of July, record-setting July. But I was reading all of this, and I know the whole thing comes out, but the part that shocks me, because you guys know I pay attention to a lot of this, and I read every single line. I liked where they came in at. That's a good number. And I like that they were, kind of flat on rent, which I love that it's actually down a little bit considering they closed a couple of theaters. But as you come down, you'll see that they're not servicing their debt per se. So until they take a big chunk of the debt out, which they don't have to do for the next year, next 2 years actually. So they're going to be able to float along and string you out as long as they can. The cash and cash equivalents right here, $200 million would be the difference in a 6-month period. So the next 6 months, I assume they're going to burn off $400 million. But if we jump that down to 3 just to give them good faith, like, hey, you did really well. So let's just go $300 million. But they're going to burn off cash. So the amount that they need to not fall down underneath the covenant is going to be $100 million. They need to have $100 million cash on hand. I know they always include the revolving credit as far as what they could draw from. I'm going to tell you right now, I wouldn't. They have a defaulted credit rating already. It's going to get worse. But this is why Adam Aaron needs to dilute this float and or raise capital, because they have no cash, guys. $400 million is zero. Just know that, because the previous covenants had forced them to have $160 million on the books. And those covenants are suspended at the moment by the banks. But I want to pay attention to a really important number. One is always going to be this number here, the shareholder deficit. As you can see, they have paid off around $40 million on their deficit. Guys, $40 million might as well be zero, considering it's $2.5 billion of shareholder equity. There is no equity. It's called a deficit. But I want to show you this number here, just so everyone's clear. This is 66,000. This is how many people are going to the movie theaters. Guys, the revenue number is one thing, and we can all predict the number, we can get the number, but the truth is it's not about dollars, considering that the price of a movie ticket has gone up, concessions has gone up, you're dealing with inflation, and inflation has not increased. So when they tell you that the 2019 number is so close, considering how many dollars they made, right? This is the best day, best total since 2019. I want you to look at that number, 66,000. That's how many people went to movie theaters. Let's go ahead and compare that to the actual number, which you need to compare to 2018 and 2019. They were doing 91,000, 96,000, practically almost double, 176 and 182. So when you go back to this screen, 113 and 98. That's what I'm telling you, how far you're off considering the years. So you're losing around 30 to 40% per quarter on admissions itself, on attendance itself. This is why I always tell you it's about units, not dollars. And in this case, the unit would be the actual person, the attendee. So that's the truth about the movie theater industry as it's falling to pieces. This is why Adam Aaron's hanging on. This company will be around for a long time, guys. It's going to be alive. It's going to be well. It's going to run. The unfortunate part is shareholders, if you're holding shares, you will not be seeing any profits your way. I can see a pump coming to you because of earnings, but this was released before the market even goes out. That's to pump it up for the day. That it's even to pump it up for options per se. But market makers know exactly what's happening here. If I'm able to predict the number, and I'm just a damn guy who sweeps the floors, okay, I'm nobody. If I'm able to predict the number to the dollar, what makes you think Wall Street hasn't priced in what you guys are all hyped up about? Ask yourself. Those guys are the damn professionals of the financial world. And who am I? I'm just a dude with a mic and a camera. I'm telling you right now, this is all playing out the way they want it to. Good luck, guys. You're going to need it. This company is not worth nearly what they tell you it is. Peace.